November the 10th, 2017, 9:53 a.m. EST. One thing we like about the stock market is there is never a dull moment. Crazy things can happen, good or bad, almost any hour of any trading day. Even with 31 years in the business, we can still get surprised by events, company behavior and investors' reactions. We have had a column like this before, but, as noted, the market is like a gift that keeps giving unusual events. Let's take a look at 5 events this week that were outside the norm. West High Yields Y Resources Limited. Y on Venture, on October 5 announced a $750 million deal to sell its mining assets. This week it terminated that deal. Why was this unusual? Well, prior to the announcement the whole company was worth $16 million. It soared 1,000% on the news, and then regulators halted the stock. Anyone in the business knew this was a fishy deal right away, but regulators have refused to reverse the trades done after the deal was announced. Of course, it is everyone's investment dream to see a takeover at a giant premium, in this case 4,600%. But when the shares resumed trading on Friday morning and plunged more than 80%, that dream quickly turned to nightmare for speculators. Okay, it is not really BCE's purchase that surprises us. After all, security has already moved to mobile applications. You can easily monitor your house now on your cell phone. No, it is the timing of BCE's move that intrigues us. You see, Alarm Force, the company being acquired, was up for sale several years ago. No one, including BCE, seemed to care at the time. Alarm Force Industries shares, AF on the TSX, were trading at $3 9 years ago. Now, BCE has offered $16 per share for the whole company. Maybe BCE just has too much cash flow? There is a big bun fight going on in the online gaming sector this week. In March, Scientific Games made a very attractive bid for Nyx Gaming, Nyx on Venture, at a 105% premium. With such a high premium, and an all-cash bid, it seemed a done deal to all concerned. Until this week, when William Hill, a 6% stockholder, requested that its preference shares of Nyx be converted into common shares, even though the conversion price is $3.67 per share, and the takeover is at $2.40 share. But, if converted, William Hill will control 31.9% of the shares, making a takeover of the company extremely difficult, if not impossible. William Hill is trying to protect its position in a commercial agreement between the two companies, and is clearly playing hardball, willing to lose $50 million to make its point. On Wednesday, after the release of earnings, Spin Master, toy on the TSX, shares had a $4.77 per share, or more than 10%, intraday swing in price. CCL Industries, CCLB on the TSX, also had a nearly 10% swing the same day, also on its earnings release. CCL closed the day down just 3.5% though, and toy closed flat. Now, wide swings in stocks is clearly not surprising to us. But these two are pretty solid companies, and we don't think they should be trading like, well, junior resource stocks with big daily price variations. It seems to us investors might be just a little too focused on quarterly results these days.